Time now for a look at some of the day's business news, starting with reports that Washington is set to end its waivers on oil sanctions as the Trump administration steps up pressure on Iran. Brian Quinn is here from our business desk to tell us more. Brian.
Well, you may recall Donald Trump unilaterally withdrew the U.S. from the Iran nuclear deal just about 1 year ago, with sanctions taking effect in November. Well, at the time, Washington issued 6-month waivers to 8 countries that import Iranian oil in order to give them time to find new suppliers and to avoid a price shock on the oil markets. U.S. officials now apparently confident that the market is prepared for the removal of those waivers. Moran Berstecker reports.
Ramping up its maximum pressure campaign against Tehran, Washington is set to announce that all countries importing Iranian oil will now be subject to financial penalties. The decision comes almost a year after Donald Trump withdrew from the Iran nuclear deal and moved to reimpose sanctions against the Islamic Republic. Washington had initially agreed to allow 8 countries, including China, Japan, Turkey, South Korea, and India, to continue importing Iranian crude in order to keep global oil prices stable. But the U.S. now appears confident the market can take the hit and is hoping to convince Saudi Arabia and the United Arab Emirates to raise production to help offset the impact of sanctions. The decision to remove waivers could curb Iranian oil exports from 1.9 million to 1 million barrels a day, according to estimates, nearly halving Iran's total output and putting further strain on an already struggling economy. But the move is likely to put Washington at odds with its European allies, who are already working on a mechanism to bypass anti-Iran sanctions. It could also have domestic implications for Donald Trump, who has vowed to keep petrol prices low as part of his 2020 campaign pitch.
Well, crude oil price is seeing a significant spike as a result of that news. Brent crude and WTI both surging around the neighborhood of 2.5%. Brent crude closing in on $74 a barrel. Over on equities markets, Asian indexes with a fairly lackluster session as trading thins out during the Easter holiday. Hong Kong closed today. Shanghai, though, down over 1.7%. The Nikkei in Tokyo and the Kospi in Seoul with some very minor gains Monday. European markets closed for Easter Monday, but with the U.S. and China reportedly in the final stages of negotiations to end their year-long trade war, France 24 spoke with Stephen Innes, head of trading SPI Asset Management, about how that resolution could actually end up hurting European car makers.
It all comes down to this, what we're thinking his election policy is going to be. And I think he really wants to appease his America First base, primarily that sector, the auto sector. We really think he's giving in a little bit here to the China trade deal, sort of watered down, and we think he may turn his focus to Germany, given the fact that big auto is such a strong export area in Europe. And, they're suffering right now. They're struggling ever since that diesel scandal. And, they just really haven't come back yet. So this could really be in the nail in the coffin, so to speak, for the EU auto industry if the U.S. does levy these tariffs.
Well, next, Carlos Ghosn has been hit with new charges that he enriched himself at Nissan's expense, causing $5 million in damage to the company. The former Nissan chairman's already been charged with underreporting his compensation and transferring personal financial losses to the company. Ghosn was arrested for the 4th time earlier in April. In all, he spent roughly 4 months in a highly restrictive lockup in a Tokyo detention center. Ghosn's lawyers applied for bail for him shortly after the indictment was announced. He maintains his innocence, saying the charges against him are part of a conspiracy by Nissan executives to take control of the company. Well, finally, for business, Saturday was April 20th. That's 420 in the American date system, a number closely associated with marijuana culture. As the unofficial pot holiday, 420 has come to be seen as a sort of Black Friday for the increasingly legalized marijuana industry in the U.S. and Canada. Call it Green Saturday, perhaps. This year it had some growing pains. The Guardian reporting that demand was intense enough to crash the website of pot delivery service Ease. Also reporting troubles, online dispensaries Nug and Chill. Weed is now fully legal in 10 U.S. states. Cannabis investment firm ArcView estimates legal retail sales hit $10.5 billion last year, triple those of 2017. Will, I want a new career as the branding consultant for these weed distribution companies, Nug, Chill.
I'm guessing the CEO of Nug and Chill is very disappointed those profits went up in smoke, Brian.
Indeed.
All right. Thank you very much, Brian Quinn, with a look at the business news.